You're listening to the Perth Property Show, Australia's only weekly property podcast by West Australian experts for West Australian listeners. Catch your latest episode every Monday at 7 a.m.
Good morning, everyone. Welcome to the Perth Property Show. My name is Trent, your host, as always. And this week, we are running down the same path as we have for a week or two now, I believe, on the selling side, because it is such a seller's market. I'm trying to get more sellers into the market because we are so low on stock. We are in the 8,000s when it comes to property available. It is just ridiculous. So the more sellers we can get activated to think, oh, this is how I could sell, or maybe I should sell, or maybe I should sell with this person, the better, because God, we need more properties available, and so do the agents. I think the funny thing about that is at the moment is the hard thing is not selling a property for a real estate agent. It's finding a property to sell. Luckily, we've got Mark Anderson from Hub Real Estate in today. Mark, thanks for coming in.
Thanks, Trent. Thanks for having me.
We are really niche in our chat today. We're not talking about how to sell. We've spoken to Jason Whiteman about that last week. We're talking more about specifically selling luxury product, because that's a market right now that's especially tight in terms of the number of people selling versus the number of people looking to buy, especially given all that money that's coming back from expats, East Coast, activated, just more Western suburb purchases. Geez, it's a tight market, but it's also a unique market to sell in, isn't it?
Look, it is. I think what happens in this sort of market is that we do have a lot of buyers which are contacting us. So, and what they're doing is they're quite specific in their needs and what they're looking for, and that's not even talking about their budget at this point. So I tend to think that agents have always talked about databases. This is the time when a database, when taking someone's details and working with buyers, what we're doing is we're actually locating sellers and matching them with the buyer.
So you're nearly acting as a quasi-buyer's agent a lot of the time.
That's right, we are. And I guess that that does pose the question as to who are we working for. At the end of the day, I think that anybody who is selling a house has to get that straight with the agent. And it's not necessary that the seller would have to pay the agent. Sometimes the buyer will pay the agent, but that does have to be set up right at the very beginning, because you don't want to be thinking that, hey, this agent's come to me, they're going to be doing the right thing by me, and all of a sudden you're not getting the service that you thought.
At the end of the day, the code of conduct really, it boils down to whoever is paying you as a sales agent, that's who you have a fiduciary responsibility to, not the person who's not paying you.
And that's why it's important that all parties within that transaction or potential transaction, it's the rules of the game are made clear from day one. So I guess that's sort of one side of it. If you said to me, Mark, we've got this house here, spent $4 million on the land and $4 million on the build, we are now thinking about selling it. And I guess that's probably the preferred option for me. Really, I always believe that a property should hit the market and should be offered to people at large, not only your own personal database.
Okay, so regardless of whether we're in a luxury market or the rest of the market, putting it out to as many people as possible is doing your job, really, unless specifically the seller says, which is the case in a luxury market a lot of the time, I want to keep this quiet, I don't want anyone knowing I'm selling this. It
right.
happens, right?
It does, yeah. Well,
Yeah.
I guess I do chuckle about that, because I think you can't sell a secret, and I do think that you never, particularly when the market is strong, which it is, you'll never find that maximum price unless you get it out to the maximum amount of people.
Okay, so that doesn't change. I was chatting with Jace last week about different styles of selling, having a from price, doing an auction, having expressions of interest, having a set date sale. Do you find that in that luxury market space, the premium market space, is one way that seems to work best, or is it more, again, like any price point, determined by the dynamic of buyer and seller at the time?
Well, I think this is definitely a market which I would lean towards an auction. I think that what happens is that, being that I've been in it for such a long time, there was either a private treaty where you had an asking price, or you took the property to auction. Now, you took the property to auction if you didn't know what the uppermost maximum level that you could achieve. And I think this market we're about to head in, and I think it'll actually move into this, get stronger and stronger. And so I would think that if I don't know what the maximum price level for this luxury home or whatever home it is, then I've got to put it out there to as maximum amount of people, be able to give them a sensible guide as to what the property is going to sell for or what I think it's worth. But at the end of the day, leave it to the 2, 3, 4, 5 bidders on the day.
Well, I've always said with auctions, it's not a good idea to do an auction unless the property sells itself or can sell itself, because it's such a beautiful house. And I guess where that lines up with the market you sell in, Mark, is that a lot of these houses are beautiful houses, and they, especially in a good enough market, they will sell themselves.
Yeah, absolutely. But you still need someone to be able to facilitate that. And I think that if you are selling, I mean, when you're selling any house, whether it be luxury or not, if you're representing the owner, representing the house, you have to know exactly every single detail about that home. So selling a home which is a luxury home, if you like, you have to know every detail about it, because that buyer has a very high expectation.
And that's probably a great segue in the characterization of the buyers. Would you suggest that buyers at the higher price points are much more discernible? They won't take the sales talk. They can't be sold as easily. They really want from you that very genuine, honest, deep understanding of what it is that's being sold, so that they have confidence that they're talking to the right person, and the relationship of the selling agent is just as important as what they're buying as well.
Absolutely. I think they can see straight through. If you're not telling them what they need to know, if the salesperson's putting a real sales pitch, they'll be able to see straight through it.
I've noticed that is just so much more the case in the premium luxury market, that the buyers are just that much more no bullshit. They will just walk away if they don't feel like they're in an environment, because they don't probably need to buy. They're much more astute and pragmatic with their decision making. There's a lot less FOMO going on a lot of the time, and they're making business decisions every day a lot of the time, these buyers, with what they do on a daily basis.
Absolutely, but they also know what they want. They know what they want, and you can't tell them that the house or the property is something different than what it is, if that makes sense.
It makes a lot of sense. One thing I've also noticed about the way that luxury properties transact, I guess in the western suburbs, which is very different to the way that the rest of Perth transacts, is on this one small point, the deposit. Now, you go around most of Perth, doesn't matter really what the price is, the deposit's probably 5 or 10 grand. What I've noticed though in the western suburbs, it generally seems to be this rule where you need to stump up 10%. What's with that?
Personally, I always ask for between 5 and 10%. And normally get it.
It's sort of like you need to prove yourself to be in the club that, yes, I do have the cash, and therefore I can qualify to put an offer down.
That's one way of looking at it. I look at it from a point of view that if I was a seller, that what I would want is I'd want a decent sized deposit to take my property off the market or stop me from selling it to someone else. So that's what I think. That's why I asked for the 5 to 10%.
I just find it very unique. It's something that I think is very specific to the western suburbs. Have you noticed that? I mean, you've sold properties outside.
I have, yep. I've got a 15-minute bandwidth and sometimes go outside of that. But I think, what I think is interesting that people say, well, look, I'll make an offer and the deposit is, look, I'll give you $2,000. And I said, that's just not going to cut it.
Yeah, but it does cut it in 95% of properties in Perth.
Yeah.
Don't you find it's just an interesting thing that I've noticed, a very unique anomaly, that regardless of the price point, it's 10%. Anywhere else outside the western suburbs, it's probably $5,000 to $10,000. Regardless of what you're paying for.
Yeah.
I find that interesting. When it comes to transactions in a luxury market, I find that the smart money moves first, and generally that smart money is the premium luxury market. Have you found that you've actually seen your side of the market has been stronger for a lot longer than probably the pundits have been saying the rest of the market, and probably give it 4 or 5 months that most of the mainstream have been saying, yes, we're in a seller's market right now? Have you noticed it a lot longer than everyone else, given that you have been in the smart money, I guess?
Our areas, Nedlands, Dalkeith, Claremont, all the way through it down to Cottesloe, Peppermint Grove, and Mossam Park, for that matter. I think that the smart money has been moving in there last year. They've got a good feel of the market, and they know that this is the time to buy. As far as from an increase goes, I would have to say that Cottesloe leads the market, leads the western suburbs. And I'm seeing that now filter down to other suburbs like Nedlands, Claremont, Dalkeith, where we're seeing land values increase. Not talking about median price, we're talking about land value. And what I've seen in Cottesloe is in the 8 weeks leading up to Christmas, it would have been somewhere between 20 and 25% increase, which is a lot in 8 weeks.
There's a big difference between selling a property at $1.5 million and selling a property at $10 million.
Yeah, absolutely.
How does your job change?
Well, I don't think it changes at all. I think that I still give the same amount of dedication to both, but I think that the person who's making the inquiry, their level inquiry and what they're looking for is different.
Explain it.
I would think that if you're coming to me and asking, you're buying a luxury property, you'd say that the first thing you'd want to have a look at it, obviously, make an appointment. You don't really want to go through a home open. You want to make an appointment to go see it privately. Then it's a second inspection, then it's a follow-up inspection. So it's made up of these inspections where they're going through and making sure it's the house that they want. And then at some point within the second and third inspection, then it becomes a case of value.
So they start talking money.
That's right. Now, my experience, as soon as people start talking about money, that's when I know they're interested.
They've made their buying decision, and now it's about, can I afford this, or do I see value in this?
Do I see value in it?
When you're at that price point, it's less about can I afford it. It's more about, is this worth the money?
That's right. And I guess the thing is that it doesn't come down to the square metre rate or the cost of the appliances. Sure, that's important. They just want to know that what's there is quality. But what it comes down to is that, well, look, do I see value here? Does it tick the boxes that what I'm looking for? And if it does, what premium am I prepared to pay?
When you're negotiating a property at $10 million, what is the integer of negotiation? In so far as that, are we talking at 10 million or 11 million? Is it 10 million or 10.1? Have you ever seen it get down to a conversation where we're talking about, going back and forth at $1,000 increments, or is that really out the window at that point?
It's out the window, 100%. So we are talking about, well, look, I guess to go into a bit of a role play, I can say, well, Trent, we're asking 12. That's what our expectations are. Whereabouts are you sitting on it? And you might say, well, look, I don't see value above 10. Okay, so we're close. So
yeah, we're close. It's a $2 million difference.
That's right.
Most people would never buy a $2 million house in their life.
Yeah. So therefore, then you start talking about, well, okay, so that's interesting. Let's just see where we can work it. Where maybe you want to move in tomorrow, the owner wants to move out tomorrow, or whatever it is. There might be other things there which may assist in the negotiations.
Do you think there's a level of ego, even where the buyer even if you wanted to save an extra 50 grand, probably wouldn't push the point to that level? As long as we got pretty close to the nearest 100 or nearest $500,000 at that point, that's probably where we'll leave it. Have you ever seen someone at that Scrooge, that's fickle at that sort of price range as they might be at $500,000?
No, I haven't. I think there's usually something else going on. A firm believer that when someone is selling a house, they have to be ready to sell. So they've got to be prepared to walk out the door at a certain number. Sometimes the instructions come down to an agent like myself, and they'll say, well, Mark, this is it. This is our number. If we can't get anywhere near it, we'll just close up and go. Well, I've already got someone that's close to it. They're only $1 million, only not that far off, $500,000 off, or has to settle in 30 days. No, that's not going to work.
Do you see, going on to terms now, great segue, do you see a subject to sale happening a lot because these are such large prices? So do you see long settlement terms? Is it acceptable to have, in most of Perth, it would be a 28-day finance, 28-day settlements. Do you see it as much more acceptable given the amount of money we're talking here that it might be quite a lot longer settlement a lot of the time? Or actually, no, we expect most of the time it should be cash 28 days? No,
I don't think it's cash 28 days. It'd be great if it was, but I don't think it is. Usually some people they're moving from one property to another. And in an ideal, sometimes it really gets down to is it going to be subject to finance? Yeah, possibly it will be. So I think that if once the market gets to a point where it's white hot, which it's not at the moment, when it gets to white hot, that's when the conditions start to fall away. It's not so much really dependent on the house, it's really on the buying conditions. If I know I'm competing against you, Trent, about a house, and I've been to the bank, and the bank have just said, yeah, no worries, but you have to make an application. But I know that if you're bidding, I'm going to have to take that risk.
And go cash.
At
the moment, we hear a lot about the expats. I referenced it before. A lot of people coming from London or New York, coming back, coming off of $2 million apartments, $3 million apartments, and thinking, we want to come back to Perth. We've had inquiry recently as well where we're probably looking to come back in the next 6 months, figure out when that is, what can we buy? We have sight unseen. Have you started to see a bit of that inquiry come through?
Yeah, I've just been away for a couple of days, and I had two that live in Melbourne, and another one was in London that wants to come back. So what they're doing, they're seeing this as an opportunity. Perth property market does look like that it's quite young, in as much that it hasn't started to mature to any great extent. So it looks like it's good buying. That's one side. The second side is that I think people are realising that, hey, you know what, Perth is not such a bad place. I want to come back.
That's a good thing, because I think that drain of really ambitious people that Perth seems to lose a lot of the time to places like Melbourne, Sydney and London. Yep. It's probably a nice little reckoning at the moment where a lot of them are realising, hey, I really miss my family, and look how amazing Perth is right now. The cool thing about those sort of people are they're making $500,000, $1 million a year, investment banking as a doctor or a lawyer in these places around the world, coming back to Perth, they see a lot of value and they're probably pulling their hair out going, how is this property $2 million? It's $7 million in Melbourne.
That's right, yeah. And technology is bringing everybody a lot closer.
Tell us about that. Are we just talking about Facebook Messenger videos going on, or are they expecting 3D walkthroughs, the Matterport technologies? What have you found people are coming to put there? Because there's not a small amount of money. If you think about buying a property sight unseen for $2.5–3 million, that's a ballsy thing to do.
Yeah, it is. What could possibly go wrong?
Yeah.
Matterport, the videos, FaceTime, and usually dial a friend. They've usually got someone here that they'll also come through. Selling, again, if you're selling it like any type of property, you've got to see it through the buyer's eyes. The buyers are looking at it and saying, well, 1.5 is a lot of money for me. 500,000 is a lot of money for me. And whether you're presenting a $500,000 property or a $5 million property, really there's no difference.
At some point, there is a stretch for that person.
That's right.
Yep.
And I think that when we're selling, maybe it's old-fashioned, but I don't think video is really selling the property. I really don't. I think it's selling the agent. So I tend to think that what people want, people are information-centric. That's what they want. So you give me as much information as possible, then I can make my decision.
So is that more talking about, look, you're this many metres from the river, you're this many metres from the local IGA. These are the schools that your kids can go to.
Absolutely.
That's what people care about more?
Absolutely.
Yep.
Yeah. Look, I use it quite a bit. I love the recommendations from the owners. What I've loved about living in this spot. What's
so that's
important
unique.
To me.
I don't think I've ever seen that, and I've seen you do it a little bit recently in these web books that you use. A personal story, a personal touch of why they love living in Dalkeith, for example.
That's right.
Never seen that in any other suburb.
Yeah. Well, I think that's important. It's a recommendation. It's a personal recommendation from the person who's lived there.
It's still an emotional purchase at the end of the day. However pragmatic and astute and smart these buyers are, it's still an emotional purchase.
Absolutely. And they're reading it, and it's coming directly from the owner.
One thing that's quite noticeable about the western suburbs especially is that it has quite a low percentage of investment properties, therefore a very high percentage of owner-occupied properties. Do you see that changing as the market increases? Do you see people going in and going, I just want to buy this, I'm not going to live there. I just see it as a yield play where I'm going to buy it for $2 million and maybe it will do a Melbourne and it will be worth $3 million in a few years' time. Have you seen any of that coming in? And if not, why not?
No, it definitely has come in. And that's why I say that the land value, rather than talking about the median price, is talking about the land value.
Is that because, and that's specifically because in the luxury market, the houses can be worth so far different values, whereas in the median house price areas, the houses are probably worth between $250,000 and $400,000 across the whole suburb?
Yeah.
Is that the reason?
Look, the reason for it is because the land that's the basis of what goes up. When you've got your block of land, when you see that go up by 10%, that's a real 10%. There's nothing to depreciate. If you've got a house on there which is, let's say, 10, 15 or 20 years old, then sure, the cost of reproducing that has increased, but the actual cost that you can attribute to the value has decreased. So that's why I talk about land value. And median price, it depends on what's been selling within the suburb. So that can sort of give, in some ways, like a false reading on what's happening. So I always look at land value. So if someone says, what's happening in the market, I talk about, well, the land value's gone up about 10 to 15%.
Okay, and that's what investors generally are focused on when they're coming in, or are they looking at rental yield? Or
Well, rental yield is certainly something which is of some importance, but they're looking for something which is safe and capital return.
Because it is really, when you're investing in a product in the western suburbs, it is sort of like investing in a blue chip share.
Absolutely.
It's like buying a share in CBA.
Yep, it is.
But when you buy a share in CBA, you're probably not looking for those wild speculative spikes in value, right? But the paradox there for me is that this is very much a time where, especially given you can leverage your purchase in property, you could put down $500,000 of cash towards a $2 million purchase, right? That property only has to go up $500,000, 25% to double your money. It's a pretty interesting opportunity for investors right now if they want to scale, they want to leverage as much as they can to make some pretty big money on not massive increases in value, given we're still lower than we were in the boom anyway. You know, we're still making up ground.
Absolutely. So, what would you think that you could get finance for? investment loan.
Investment loans right now doesn't matter what the price point is, which is the great thing about it. You can be getting investor loans in the low 2%.
Okay, so let's talk it up and say 3%.
Yeah.
What I think about the Western Suburbs now is that if you don't, this sounds like a sales pitch, but it's not. It's a reality, and that is that if you hold out and in the next 8 weeks it goes up another 10%, we're basically talking that's another 150,000. I tend to think that, if I was an investor, I think, and perhaps across the board, but certainly when you're talking when the land value is 1.5, I'd be making a dive for it now.
Well, very personally, that's what I've seen in the property that I purchased a couple of years ago off of you in Nedlands. I thought we purchased at a really good time to be doing that. It was when Bill Shorten had his war on property. In the election, capital gains, negative gearing, everyone was packing themselves, and including people in the western suburbs. There wasn't a lot of real demand.
That's right.
Nearly 2 years ago. It's been nearly 2 years since we first purchased that property, and the value looks like it's a good couple $100,000 more.
Absolutely.
And that's a fantastic outcome when you think about most people's salaries are, $100,000 a year. So for that to just happen passively with the savings that we put towards that purchase, and then to go, well, look, we're still at pretty much the start of the run here. What you could be seeing, I think, a lot of people obviously focus on the median house price because that's where maybe they live or what they see a level of risk for reward. But if you really set your sights and you've got the cash to get in, even at 90%, if you can cover that, given the rent on these properties generally does cover the mortgage pretty easily as well, even in these blue chip suburbs, the quantum of money you could be making, just given the size of this investment, really can be life-changing for people.
Absolutely. And, with rental yields set to increase this year, when we're having vacancy rates of around 1 or 2%, I think that from an investor's, the story only gets better.
I think it's quite daunting for people. They think, oh, look, I could never buy a $1.5 million house because, that's a $1.2 million mortgage. That's a lot of money, Trent. That's $3,000-$4,000 a month. And that's true, but the rent on that property is $3,000-$4,000 a month at least as well a lot of the time. So it's pretty much paying for itself, if not more.
But I'm a great believer that why start at the top. There's suburbs which I think we've spoken about before. There's feeder suburbs, so everybody is looking to climb that ladder. And I think that now is a good time to be making that move in the western suburbs for sure. So
to reflect on that, then, if we've got a property that is either a development block or probably not a home to live in, it's one of the more rundown Californian bungalows in the suburb.
Yep.
How are we presenting that, given we are in a luxury market, but we're probably not targeting someone who's ready to move in tomorrow?
I had one fairly recently before Christmas in Dalkeith, and we cleaned it up inside. We didn't paint it. We didn't put new carpets in, but we made sure that the gardens looked neat. We made sure that the interior looked like someone could live in it, and that was sufficient. We had 4 offers within 10 days.
And who bought it?
Someone who's going to rent it out initially and then knock it over.
Okay, and that is probably the point I'd like to leave this on today, is that a much larger portion than normal of people who buy in the western suburbs, when they're buying not the best house on the street, they're very much looking with regard to their budget to a knockdown. And that's why they're focused on that land value, aren't they?
That's right. They see it as a great investment.
They're not only thinking, well, I've got to spend $1.5 million on the initial house. I'm probably going to spend another $1.5-2 million on the build.
Absolutely. Yep.
Mark, thanks a lot for your time, mate.
You're welcome. It's been a pleasure.
It's quite unique when we can talk about the luxury market. And I think as the market starts to continue to move, I'd like to be able to hark back to this conversation at some point with you later on in the year and reflect on, as a quantum, just how much money a couple of properties at the start of 2021 in maybe Nedlands, for example, your stomping grounds, might have grown over this time. And I think we're going to be scratching our heads going, wow, you could buy a house in some suburbs for the price difference that we're probably going to be able to see over this year in some of these houses. And I'm just wondering whether we're going to be able to fit in a helicopter ride over the suburb into the marketing budget. So that'll be interesting. Yeah, well, if that is part of the strategy, I would have thought you'd be on Victoria Ave or whatnot, but that would be bloody fantastic. It'd be awesome. I'd love it. Thanks, Mark.
Thank you for listening to another episode of the Perth Property Show. If you've only just joined the conversation, you can catch up by heading over to our website, perthpropertyshow.com.au, subscribing to the podcast, or joining our Facebook page. Don't forget to tune in next Monday at 7 a.m. for more expert insights, local analysis, and suburb spotlights. Happy hunting!